Hey guys, Sports House from BK Forex. Welcome to our Forex Daily Tech Notes for 12/11/13. As always, trading foreign exchange or margin carries a high level risk, may not be suitable for all investors. I ask you to read this disclaimer very carefully to understand all the risks associated with trading margin, and to seek advice from an independent financial advisor if you have any doubts. All right, let's take a look at the charts here. I want to start with the euro dollar first because, as we talked about over the weekend and we talked about yesterday, the run was very strong, but the 38 was definitely going to be a serious resistance level. And today we saw that very much in action as we came within about 10 pips of 38. Around 93 actually was the high, I think, and backed right off, and now trading around 61. So I think for now, obviously 38 is the operating double top resistance level, and we may see a little bit of a correction. We may even see a trade back all the way down to 3700. We'll see how well it trades out for the rest of the night. But for now, it definitely looks like it's backing off the highs. Not too much again on the calendar today. Let me just extend this chart a little bit so we can get full screen on it. And it becomes essentially a function of momentum trading at this point, with euro really getting bought up through all of the key levels, but now coming up against this very, very key sell level here at 38. If we do take it out, if we take out the 38s, sort of I think 38.30 is the key level. If we take those out, that's going to materially change the structure for the whole year and puts us very much on target towards the 140, as you're going to get just more momentum behind it. But for now, the shorts were able to hold it off at 38, and we may see a little bit of a correction after, especially after, what is it, 1, 2, 3, 4, 5 days of rising highs. Similarly, you saw the same kind of back off here in the pound. The pound again went to the highs. It kind of backed off. We're trading around 64.49 right now. Really, this 65 operating as the high. We obviously ran through the highs, but just couldn't muster our way through beyond that. That's going to be an interesting trade as well, because if we sort of stall out here and cannot continue, again we come back to 64. 64 being the operating level here on a turn, and if we can't get much beyond this to the upside, that is beyond the 65s, beyond the 64, 65s, 65 becomes kind of the question. It kind of becomes basically stall levels here in front of 65, stall levels in front of 38 in both the euro and the pound for the time being. If those levels get taken out, it's a completely different ballgame. But for now, hesitation, as we had imagined it would be, given the fact that we're coming up against some key highs. Dollar yen, on the other hand, kind of interesting. So again, today we failed the 103.30. This is the third day in the last 4 or 5 days that we failed it around this level. But at the same time, getting bid up early in Asia session, we're getting to like 92 here on the bid, and it looks a lot firmer as we walk into the day. So not nearly as bad as it did in North American session. 102.50 is the key downside action. If that gets broken to the downside, that really puts in a near-term top of dollar yen. Conversely, dollar yen, not a trade to the upside until the 103.65s get taken out. For now, it's really basically consolidation at the upper end of this channel with exhaustion, the key operative move here. This 103.30 has been very sticky. And the fact that it hasn't been taken out for 3 days in a row suggests we may be in a point of correction here on dollar yen. And Aussie, we don't have data again today. We will have data tomorrow. Aussie, very, very key here, because certainly 90 was the bottom. We talked about the fact that 90 definitely looked like it was going to set up the bottom. We took out the 91.50s in the North American session, but now coming back off of it. And this whole 91.50, 92 level may be another level of consolidation and resistances, especially hanging over here from a couple of days ago, from December 1. So really very important. In order for Aussie to get some strength, we need to basically climb through 95, 91.50s, through towards 92s. That's a big, big resistance level. Look at this level over here. There's a lot of resistance here in the 92s, so it's going to be a lot harder, having bounced off the bottom here, for it to make its way. Very likely, we may just simply be bouncing around here between 91.75, 9100, consolidating. Tomorrow's employment number could be very key. If it's a bad number, we're going to break 9100s, and then it becomes a retest of 90. If it's a good number, we very likely could push through 92s, but even that may not hold, because again, this resistance level here is relatively strong here. Another common dollar I kind of want to take a look at was Kiwi dollar, simply because I think what I find interesting about the Kiwi dollar is, yes, rising, all looks quite good, but if you look at it on a longer term basis, it's sort of rising against a lower high. Here's a lower high, here's a lower high, here's a lower high, continuously making lower highs. That suggests that basically we're in a downtrend and we're rising against a downtrend. So potentially a turn trade here as well. So worth watching on the Kiwi dollar. This is going to be, again, we have the RBNZ rate decision tomorrow, so that's going to be another big big event. Given the fact that if not Aussie is weak, let's just imagine a situation where Aussie is weak, Kiwi is weak, Aussie is strong, then Aussie Kiwi here, which has been holding around this 110 level, maybe a trade back up to 111 as uh, as the week, basically as the next couple of days progress. So this bottom over here looks like a spike bottom. If we can't break it to basically as long as you hold a stop against this bottom and you think that this is a turn, this may be worthwhile here for the next couple hundred points to the upside. Last couple things I want to take a look at: Euro Aussie, which we talked about yesterday. Kind of interesting here, but also flaming out here. This is again the trade against. This is a pro Aussie trade. A pro Aussie trade really takes on its full form if 150 is broken. If 150 is broken to the downside, it will really have set a near-term top here. The fact that we have 4 continuous days of no forward progress definitely gives the shorts much more of an upper hand than before. That we have a big stall here and a break to the downside will pretty much seal the fate that this is a near-term top here at the Euro Aussie. So these are all the things that we're watching today. Wishing you guys the best of luck, the best of trading. I'll see you guys tomorrow. Boris Schlossberg at BK Forex.